5 key participants in the primary market ecosystem of a stock market. Hello everybody, I'm learning partner Sushila Hariharan, and if you're interested in a career in investment banking, hedge funds, trade life cycle and OTC derivatives, do subscribe to my YouTube channel where we provide content centric research focused videos on these topics. So who are the five most, or rather what are the five most important entities in the primary market ecosystem of the stock market? Okay, we'll discuss another video in which we'll talk about the bond market, but in the stock market, what are the five most important entities? We'll talk about it right now, but before we start talking about the five of them, let's talk about what is the primary market. The primary market is the market where a company raises capital directly from different investors. That is called as the primary market. In the primary market, popularly called as an IPO market, not IPL because that is the season right now. The IPO market is the market wherein the company raises capital for the very first time from different investors. That is the IPO. That's why it's called as the initial public offering. Can a company raise equity capital from investors again and again? Of course they can. These are called as secondary sales, and when it's a secondary sale, it implies that their company stock is already listed and then they're raising the money from the market again. Hence I prefer to use the word primary market because it's the first market in which the company raises capital from external investors other than venture capital funds or hedge funds, etc. Okay, the first most important entity is the issuer. Okay, the issuer is the company that is raising capital from the investors for the very first time or the second time or the third time, but they're raising capital directly from the investors. Why is this important? Why am I calling the issuer the most important? I'm calling the issuer the most important because the promoters in this case are diluting the ownership of the company. They're giving up a portion of the ownership of their company to a large group of investors, and they want to share the profits with this large group of investors. The second one is naturally the investor. The investor is the one who is parting away with the capital for the shares that are being released by the issuer, that are being issued by the issuer. Investors fall under different categories. These include qualified institutional buyers, QIBs. It includes in India Hindu undivided families, HUFs, as well as people like us, retail investors, who put in the money for the IPO, and it's like the old joke, apply, apply, no reply. That is the investors. Issuer, investors. The third is the platform on which the shares are going to be traded. Every stock that is an outcome of a primary market activity must be listed on a stock exchange. That's why there is private equity and public equity, right? Private equity is when the private equity owners are holding the stock, but they are not listed on a stock exchange because the private equity investors are staying locked into the capital. But on the other hand, when it's the sale of stock from the company to the different investors, clearly there has to be an exit option for the investors, and that exit option comes by way of the stock exchange. The stock exchange is a trading platform which matches buy orders and sell orders from different investors. So this is called as a secondary market operation. So the outcome of a primary market activity must be listing on the stock exchange and thereafter the trading of the securities on that stock exchange. So that is the secondary market operation, so the stock exchange. Now, the stock exchange is a very important entity because it provides an exit opportunity as well as an opportunity for other investors to join into the company's fortunes. But the stock exchange is only a trading platform. Therefore, all stock exchanges have a clearing and settlement platform as well. This is called as the depository agency. In the US markets, this is the DTC. In the Indian markets, we have CDSL and NSDL that do the very important job of transferring the stocks, of registering the ownership of shares of different securities. So the depository is like a keeper of all records of all securities that are listed and traded on all stock exchanges. Okay, so the depository is a record keeper of sorts, and because it's a record keeper of sorts, it maintains individual details of ownership of every security. So this is the fourth most important item. That is, the first entity was the issuer, the second entity was the investor, the third entity was the stock exchange, the fourth entity is the depository, and the fifth most important entity is the transfer agent. The transfer agent, also called as registrar in some countries, maintains a record of every individual security holder. That means when a company has issued, let's say, 100,000 shares, then who owns these 100,000 shares? What has happened to the ownership? Has the ownership changed from previous day to today? Has there been a change in corporate actions? Has the number of shares been increased? Is there a rights entitlement on a particular security? All these are taken into consideration by the registrar or the transfer agent. The transfer agent, along with the depository, keep a tab about the records of the ownership of the securities that have been issued by the company. All these five elements work together in unison to ensure that there is a smooth and seamless movement of stocks on the stock market, as well as making it easy, feasible, productive, seamless for new issuers who want to come into the stock exchanges to list their stocks. So these five entities in the primary market ecosystem are very, very essential for the smooth functioning of the primary market ecosystem.